Good morning. Welcome to the Monday Market Update. I'm Nash Paradise, joined with me, the hero of the mountain, the conqueror of the big hill many, many times, Mr. Andrew Cady. How are you doing today, sir?
Doing good. A little sore, but good.
So very quickly, because people need to understand why I'm so just infatuated with you and why you're internet famous right now. What did you do this weekend?
So last weekend, I did an endurance event for an outfit called 29029, which is the elevation of Everest, 29,029 feet. Out in Snow Basin, Utah, we hiked up the Snow Basin ski resort, took the gondola down, repeated 13 times over the course. I think it was just under 32 hours for me to complete the elevation of Everest. So it was a feat, and I'm
32
sore.
hours of straight climbing up.
No downhill. There was one stretch for about 15 feet long where you declined by about 4 feet, and I looked forward to it every single lap. But yeah, there were parts of the trail that were a 45-degree incline. It was the most challenging thing I've ever done, and I'm going to do it again next year.
That's incredible. I'm glad you're here because I'd probably be dead right now. And I know you've got to be feeling a little rough, but thankfully we've got some good and exciting things to talk about today that are, going to give you a little energy, make you feel a little bit better as we're finally talking about a peace deal. And let's see what that's doing to interest rates, because we got some nice movement late in the week last week. A lot of this had to do with, kind of end to midweek data being meh, but also the rumors that things were getting better as we got late in the week. We're calling it mid-high on volatility because it did move a good bit late in the week. We got some of that angle. It's all irrelevant now. What happened last week happened last week, but there is a little bit of wisdom that we can pull from here. So I want to jump over into last week's economic data, and let's talk about this. So what I find interesting, and where I think this is going to become relevant again, is now that we're moving on through a peace deal, getting into a world where econ data makes sense, we had to kind of go back and look at the numbers and see, okay, how much damage has been done in the last 3-4 months. Where have things gone? And it's going to be most impactful on things like CPI, on things like inflation. So as you can see here, we got some of that inflation data on Wednesday of this week, and it was soft. We knew that some things were increasing. Headline, especially on the CPI, was targeted at 4.2, but we hit 4.2. Month over month core, we were targeted at 0.3. We came in at 0.2, a little light. Core CPI year over year, 2.9. So we didn't go wild with it. We've had some pretty rough econ data in the last few sets of reports. And I would say, last week coming in right around estimates, maybe even a little bit low. It's a good spot to be in to start building from. Anything you'd add to that, Andrew?
No, I think this was the report that we all should have feared, because this is, now the conflict with Iran has been going on. Now it's starting to really bleed. I mean, keep in mind, oil prices don't just impact oil. It impacts shipping of all products. It impacts all plastics, petroleum-based. This is the report that I was kind of concerned we could see things start to be a runaway train. The fact that the core CPI, excluding food and energy, actually came in below estimates, I think it actually sets up a really good spot for us heading into this week with first Fed meeting with Warsh. I know we're jumping into the next slide, but I think we're just setting the stage with a potential T-Steel, P-Steel, all these things coming together. I think we actually could start to see the turnaround happen.
Yeah, no, 100%. And getting into this week, there's not a lot on here. What are the two things that we always talk about and care about? It's inflation and it's labor. These are the two things the Fed cares about, and what we care about is what the Fed cares about, because what that does everything for us. And we're mortgage guys. We care about the real estate market. So those are the things that we're looking at. And like you said, this week is interesting because Wednesday we're getting Warsh's first Fed meeting. So the anticipation for this one is high, not because of what the Fed may or may not do, but because of what the Fed may or may not say. And Correct. It is kind of a gut punch that, the peace deal is supposed to be signed on Friday, Juneteenth, a bank holiday, right before a weekend. I'm like, and the day after the Fed meeting, I'm like, come on, guys. Like, the peace deal was announced on a Sunday after hours. It was teased Friday afternoon. I'm like, y'all, come on, man. Like the after hours traders and, the big billions of dollars that move global markets, like retail investors can do nothing with this information and they're late before they get to it. But, I'm not suggesting there's some, global, push to help out the billionaire hedge funds. But, it does feel like a gut punch a little bit, not being able to see markets react in real time.
I totally agree. I think, Wednesday, high anticipation for Fed Warsh. And you're dead right. It's not about what the Fed does at this meeting. It really isn't. It's about the press conference afterwards and to get a fresh face and potentially a fresh tone. We've known how Jerome Powell was going to act and be very combative with the administration. I'm excited to see how Warsh takes on his first press conference. What kind of just direction? I've said it before. I hope we just get clear direction from the Fed. None of this playing games like, I would love to see the Fed just come out and say, hey, if these metrics are hit, this is what you can expect out of us. And if these metrics are not hit, this is what you can expect out of us. Why would you not at least give the market something to ride on? So I'm excited for the press conference on Wednesday. It is kind of tough that this peace deal, because we've been teased so many peace deals, that it's going to be signed on a short market week. So I would expect extreme volatility this week. I hope the volatility is in the right direction. But anytime you have a short trading week, you typically end up with a more volatile week. With the fact that we're having the peace deal potentially signed or not signed, we don't know, on Friday while markets are closed. Any word of a delay, anything like that heading into Wednesday, Thursday, we could see markets get extremely volatile this week. So protect your pipelines.
Yeah, no, 100%. Let's talk about what the Fed projections are looking like right now. I did this by myself at the luxurious Hampton Inn in Bountiful, Utah on Monday morning of last week while you were traveling. And I was not at my best. But this was an interesting slide last week because we were really trending for a couple of jumps. We were looking in that 425 range, as far as just last week. And, one of the points that I made was the future projections on here are a lot less important than seeing how these things change week over week, month over month. And what we're seeing here is a move back towards holding the line, which I think is interesting, because if we get this stuff moved back over, if we get inflation and labor under control, we may not necessarily see an increase to that 400 range anytime soon. I think we've turned a tide a little bit, assuming this peace deal goes through, where we could see that pushed out further into 2027, which would align with some more previous estimates. I do think that rate hike is coming at some point. I do think it will be good for mortgage rates when it does happen, because it will kind of signal, the hold zone that we're going to get to. When we're going to hit it, I would be surprised if it was sometime this year, but I think we're going to get a lot more direction after the Fed presser.
Yeah, I agree. And I think the next week, next Monday, when we do this, it would almost be cool to put this chart next to the next chart, because of the CPI data coming out the way it did, and now potential peace deal on Friday and Fed Warsh speaking for the first time this week. I think this chart could really flop on us in a good way heading into next week. I think we're stacking the deck for good news. I'll put it that way. I feel like we're stacking the deck for really, really good things starting to happen. Now, anything can happen, but I do feel like for the first time in a long time, the deck is being stacked for us, not against us.
Yeah, now Caden can do that. He's a talented producer. So Caden, if you're watching there in the studio, we'd like to see a week over week on this one next week and be able to talk about how it's changing. And to Andrew's point, yeah, we are stacked for things to improve. And let's take a look at some of this improvement here on the rate movement week over week. You know, if you look back over any amount of time, I feel like it's not great. I mean, you can look all the way back to this time last year, but no one cares about this time last year. It becomes irrelevant. We're really looking at, where have things gone since about February, March. And, this upward trajectory with little blips here and there of things are looking better. Maybe we're going to end this conflict. Maybe we're not. And, shooting back up, even with the word of the peace deal, we did not see a large drop. And we'll talk about that when we're done with this chart a little bit. But I mean, we did get the blip. We got that turn. We are very near 6-month highs right now still. And with the overnight average coming in at 658, this is a number that was scary a few weeks ago and painful, in the last couple of weeks. And now it feels better, which just kind of goes to show impression is reality. And, anything can be spun to be a positive if you're feeling positive about it.
Agreed 100%. And I think this week could be the turning of the tide. This feels like we've got it going. I hope to see this drop dramatically by the time we reconvene next Monday. It's all going to determine on what FedWatch says on Wednesday and whether this peace deal actually happens and is signed on Friday.
Yep. So my big question for you, Andrew, we've been saying for weeks and weeks, hey, as soon as we get out of Iran, the Strait of Hormuz is fully open, oil is flowing again. Oil is everything because energy is everything. It impacts every single aspect of global economics on a scale that nothing else can touch. Energy costs play into all the things. So, hey, once we're out, once we're done, once this conflict is over, we should be seeing a massive drop. Oil back under $60 a barrel. I mean, these are futures. So futures are futures. It doesn't really matter what it costs to get things moved around right now. But we didn't hit there. We're still around $80 a barrel, depending on which oil tracker you're using. Why aren't we there?
Because number one, it's going to take time. Hey, let's open the Strait of Hormuz. That doesn't happen overnight. So we can look at July futures, but we're halfway through June. I do think it's going to take 30 days for the Strait of Hormuz to get open. But I also think there's a lot of trepidation of whether this peace deal actually happens. We've been teased a lot. We've been told there's a deal a lot when there wasn't a deal. And for everyone to come together, I believe in Switzerland on Friday. Yeah, you're like, okay, so that's 4 days from now. Yeah, a lot can happen in 4 days. All it takes is one Iranian missile blowing up the wrong thing to send everything back into chaos. So I feel like we need 4 days of this actually working. And I do think you're going to see oil free fall if this deal is actually inked on Friday.
Yeah, and let's be honest, it's probably not going to be one of Iran's missiles. It's probably going to be one of Israel's missiles, the way things have been going. Yeah. But, that's one of those things outside of our control. We may have influence over it, but we don't have control. And to your point, and the point that I wanted to make sure we made as well, markets are saying, yeah, okay, we'll see. Markets are very, very clear. They got trust issues right now. If this deal was certain, how can you? I mean, we've won the war 21 times now.
I'm just a little peon sitting in an office and I got trust issues. Can you imagine if I had $1 billion or $2 billion or $10 billion invested? I'd have a lot more, trust issues than I have.
No one wants to get caught with their pants down. And right now, things are moving. They're better. But I mean, the 25 basis points we've seen move on the UMBS bonds, which drive mortgage rates, like that's nothing. 444 on the 10-year treasury yields. Like we should be like 420, 425, honestly. Yeah. There's a lot of room to improve. And, there are going to be a lot of people floating right now, holding locks. What Andrew said, don't miss what we were talking about earlier. Something goes wrong middle of the week. the presser from the Fed, with Warsh coming in speaking for the first time, if it's not done in a way that people are expecting change, they're expecting someone different than Powell to be a little bit more market friendly. If that doesn't happen, these things could regress very, very quickly. And we could all be extremely disappointed if somehow this Friday, peace deal gets pushed back further. If this is political posturing and a ploy, boy, we're going to go the wrong direction in a hurry. So I'm advising, as a mortgage broker, lock it if you like it. If you've got 40, 45 days, maybe I am thinking float. And I don't normally do that. But if I've got time, if I'm a month and a half out and I'm kind of taking it day by day, if I get the slightest bit of bad news or anything that could, hamper the ceasefire, then I'm jumping and locking the pipeline. But I'm also taking this as an opportunity. This is your big takeaway. I'm going to call the people that may be thinking about refinances in the future, who are going to be hit up when the news changes. My existing clients that were, getting pre-approved a couple months ago, where affordability is a little different. I'm not projecting any massive swings in interest rates anytime soon, but I want to be the one making that call now to get people, aware, and to make sure I get them tracked, to make sure that they know I'm watching rates for you. I'm going to let you know when it's time to take action, because I feel like the news cycle, advertisements from existing lenders, these things are not necessarily going to be honest. They're not going to line up. I can use this week as a fantastic opportunity to be the expert in my market for my people and set myself up for future success when this does all get done.
Very well said. I don't even have a way to recap that. I think you put the button on it with that one right there.
Yeah, we're giving direction here, Andrew, and I know you're tired and sore and everything else. And, you and I spent I spent 4 days in Utah yesterday. You spent the entire week in Utah. We're both producers, and we do this on a daily basis. We write loans. So, half of this is saying what I want to do, but the other half is telling myself what I need to do and holding myself accountable and reminding everyone else that we have great new business prospecting activity that we can do. We can take what we just talked about. This is national news, and being the conveyor of national news adds a lot of value to you as a professional. So I'm saying it out loud because I'm forecasting what I'm doing this week and what my new business prospecting calls are going to look like. Because I know you and I are both behind right now trying to play catch up. And if we don't make time to do the right things to help grow our business, we're going to get further behind. So I'm challenging myself, challenging you and anyone else watching this. Whether you're busy or not, there's always time to do what's most important. And our job to build, grow, and maintain relationships is what's most important this week. And we've got a really easy entry point to go make a difference and, really build up our professionalism, our credibility, and our trust.
Yeah. Great opportunity to be seen as the expert with the knowledge and data we're given here. Just put it in your own words and go make some phone calls.
Exactly. I appreciate you, Andrew, for being on. Get some rest today. Do some recovery exercises. Eat those. I'm sure you want some more gels. And
I never want to see a banana again in my life. I burned 27,000 calories in 48 hours, and I don't want to see a gel. I don't want to see a Rice Krispie bar, a banana, or a Pop-Tart ever.
Yeah. Well, get back to your healthy eating. You don't do something like that because it's easy, and having to consume that many calories that quickly, your body's going to be upset with you. But I'm super proud of you and super inspired and impressed by all of y'all, for what you misogied. You had a huge goal and you hit it. But now where's the hangover after the goal? Getting into the easy stuff, the boring stuff, the small things like making these phone calls and talking to people about the markets. That feels so minimal after scaling a mountain. So I think we can all learn something from that and go out, take the right action, and make sure to tune in next Monday. It's going to be one where you're going to want to know what's going on and what's happening going forward. Andrew and I will be here to break that down.
See you next week.
Take care.